Hello, and welcome back, guys. So, the stock market is basically crashing today after we got the inflation report, which actually showed that it's much hotter than expected. We actually anticipated that inflation is actually going to be going down month over month, but yet it's actually still going up. And that's actually pretty bad to see. And so, amidst all that, of course, with the market crashing and basically the Nasdaq going down like 4%, you may be potentially thinking about basically seizing the opportunity and maybe adding some QQQ, for instance, to your portfolio, some information technology potentially, or some Nasdaq index fund, for instance. And so, in this video, I'm going to be taking a look and talking about the Invesco QQQ Trust, which is pretty much is the Nasdaq. And I'm going to be talking also about the Vanguard Information Technology ETF, which is a little bit more weighted towards information technology, while the Nasdaq has more stuff than information technology alone. Now we're going to be examining these two and comparing them and see which one makes the most sense to be holding potentially for an investor who is looking to invest, of course, based on the current situation in the markets, which seem to be going down today. Now let's start off with the investors, with the Invesco QQQ Trust, which has an expense ratio of 0.2%, and when compared to the Vanguard ETF over here, which is called VGT, you will see that the 0.1%. Now the difference is not that much. It is a little bit of a difference if you take it to many years, but it's really not that much, so I wouldn't be bothered by any of the two. I do want to examine though what are the holdings of the two. This is important. So let's go back and select holdings here, and you will see that for the Invesco QQQ Trust, it's actually mostly weighted towards Apple and Microsoft, and a little bit of Amazon as well. So you will see if you do the addition here that almost 24% of the overall holdings, that's about 1/4 of the overall ETF, is weighted towards Apple and Microsoft, is what you're buying over here. And if you go to the Vanguard Information Technology, it's also weighted towards Apple and Microsoft, but it's much more. It's actually almost closer to 40% in this case. So it's actually like 32%. So this is higher in terms of distribution. So it has more Apple and more Microsoft. Again, if you can go back, you will see it's much more Apple, for example, and much less Amazon. In this case, it's actually no Amazon at all in this one. It does have some more companies. Again, it's a little bit more distributed over here, and you will see some other companies that are not some of the top Nasdaq dogs here. So you will see, for instance, some of Nvidia, Visa, for example, MasterCard, Broadcom, Accenture, Adobe, Cisco, and Salesforce, and other companies as well. While the Nasdaq ETF over here, which is basically just tracking the Nasdaq, it's an index fund. It has a lot of Amazon over here, Tesla, Alphabet, as you would expect, Meta, Nvidia, and the companies of this sort, PepsiCo, Costco, and similar companies. Some large cap Nasdaq funds. Not all of these are going to be information technology again, because this is the Nasdaq, and so for instance PepsiCo is also tracked, but it's not going to be tracked in the Vanguard Information Technology ETF, as you can understand. Now the next thing that we kind of want to see is the performance of the funds, and again I'm going to be selecting performance here. Let's take a little bit of a closer look at what they have been doing. Now you will see that the year-to-date return for this one has been minus 22% almost. So of course the Nasdaq has been going down, and this is tracking the Nasdaq, so this is minus 22% almost again. Now this one is actually down minus 21%, so a little bit less in terms of information technology alone. But if we go back here and we take a look at, let's just say, the 3-year return, this is 64% for the Nasdaq, and this is 70% for the information technology ETF, and 120% for the 5-year return for the Nasdaq again, and information technology 150%. So you can kind of see over here again, if you compare the two, that overall information technology has been doing a little bit better throughout the years, and even in this current slump it still seems to be doing a little bit better compared to the overall Nasdaq performance. And so based on what we are seeing here, it looks like the information technology ETF may be a little bit of a better choice. Again, this is based on historical action. It's not really based on what the companies necessarily are going to be doing in the upcoming years, because of course we don't know that. But based on what they have been doing in the past, which we can of course utilize to potentially help us predict the future, it looks like the Vanguard Information Technology ETF has been doing a little bit better. And so if you're actually potentially looking to take advantage of this current downtrend, which I think is a good idea, it may be a potentially a better idea to add the information technology instead of the overall Nasdaq, which contains again companies like, for instance, PepsiCo, which have a little bit of a weight here, and they may not be doing as well as some other companies that are growing more, as they seem to have been doing better over the years. And again, even in this decline, they seem to be doing better overall. So it may be an opportunity, a case actually, where buying the information technology ETF could be a better idea over here. Now, I don't think you will be doing the wrong thing buying either of the two, frankly. I do like both of these, especially after this insane decline right now, being down like 22% overall for the Nasdaq and the ETF fund, 21 to 22%, is a great opportunity, potentially great opportunity for an addition to your portfolio. And even if these continue going down, you can still dollar cost average and buy this at a cheap price and keep adding as they are going down if they continue going down. If they don't continue going down, you have the added advantage that you have bought at a low price. And so this is the good thing about buying at a low price. You can have the upside of potentially getting rewarded for buying at a low price, and you can have the opportunity to continue adding to your overall position by dollar cost averaging. So you cannot really go wrong with this. What is worse is actually buying at a high price when the market is actually ripping. So right now, when we're having these great opportunities, when the stock market is down, it's probably a very, very good idea to potentially add either of the two. But I myself, if I'm looking to add any of these two, I would probably potentially right now go for the Vanguard Information Technology ETF, even though its expense ratio, I believe, actually no, this was the one that has 0.1%, so it's actually lower than the Vanguard the Invesco QQQ one, so it's actually even lower than this one. So I know that a lot of people are looking at these two, the Invesco QQQ Trust and the Vanguard Information Technology ETF. So if you're actually comparing the two, I kind of wanted to make this video and kind of tell you a little bit more about how they are doing and what is potentially a better investment for your portfolio. Now again, I don't think you can go wrong with any of the two, but you got a little bit of a better idea of what the distributions are. Remember that with this one, if you decide to potentially go with the Vanguard Information Technology ETF, you are very much weighted towards these three. The Apple, Microsoft, and Nvidia over here. These are very, very core holdings for this one, and they are almost 40% over here. And again, if you go with the Invesco ETF, it's Apple, Microsoft, and Amazon, and all three of these are about 30% of the portfolio. So keep this in mind and decide which one is better for your case. And thank you for watching this video. If you enjoyed, if it helped you a little bit, please like it and subscribe if you're new around, and I'll see you in the next one. Bye bye for now. See you soon, guys.